Okay, hello everyone. I hope you are doing well, and I hope you had a nice weekend. I just wanted to make a video so I can explain my methodology for the new traders or for those who are trading with a different strategy and they may want to learn more. So this video is going to start everything from prep, and I'm going to give some examples from Friday regarding the price action. If you have any questions, feel free to reach me through messages here on YouTube, and I will answer you with the first possible chance. Okay, let's dive into it. So we go. The first thing I do when I do my prep. So we're gonna go. The first thing I do is when I do my prep is my technical analysis prep. So I start with the high time frames. We have the monthly. So I start from the monthly and I go all the way back to the 15 minutes. So starting from the monthly, I like to draw some liquidity zones, especially at the highs of the weeks, of the previous weeks, or the lowest weeks if we're like below. So to draw some important liquidity zones. We don't have a lot here, so I'm just dropping down to the weekly. We have again, as the bar was coming out, so for the last week, we had some important liquidity zones. This one was hit. Then we have a little bit of high. This one was almost reached. So this one. And there is another important about here. So I like to draw this and I name them weekly liquidity zones to differentiate them from the daily ones. So then we go to the daily. So you can see here. In the meantime, while I draw the liquidity zones, I like to draw any imbalances that I can see also. So we can see we have a daily balance here, but I draw it on the 8 hour. We can see it here, and then we draw like the 8 hour. We can see here clearly the imbalance, and we can see also the other liquidity zones which are drawn up here. These are all highs that hadn't been taken before, and the market is tending to reach them, so it can grab some liquidity so it can move. The liquidity, the market's actually moving between two states. It's moving either from internal liquidity to the external, or from the external to the internal liquidity. I'll give some examples. So here, these are external liquidities because they are on the outer side of the swing. These are all internal liquidities. So as the market is coming up again to cover the space, it's trying to take all these internal liquidities. Okay, this is more obvious during the session in the lower time frame, but it's obvious here as well. We can see it. We do the same thing in the 4 hours and so on. We do the same thing. Draw important liquidities here. These are like targets. They work as targets. Obviously, the higher the high time frame it is, the most important the liquidity is. Yeah, so we do that all the way to the 15 minutes, and then the other thing I like to do is I go to my high time frames using the VWAP, and I can see, for example, and I try to analyze the market, whether it's going to be very bullish, whether we're going to see some sellers or buyers, etc. So for example, I'm going to give you, so here we are at the VWAP, okay, the yearly VWAP. The yearly VWAP is the big investors. So see the price is around the VWAP. Some expect, as every VWAP, I'm expecting some choppiness, some sideways action. I don't expect something dramatic or trade like something big. Quarterly, I don't really pay attention because it just started to get formed, so doesn't really matter for now. Then we go to the monthly. We see the monthly is still above the monthly DVA high, which means that the buyers are in control. Okay. And then I try to go into the lower time frames, which is the weekly. And then I see that the price action follows along the weekly DVA high, which means I can have the weekly DVA high, this mark, like on this framework as a benchmark. If I see dropping below the weekly DVA high, especially below the yearly VWAP, it means that the sellers are regaining control, and I'm gonna be looking especially to sell. Okay, so that's about my prep. Also, you can see these high time frames. I've drawn the same ones. So you can see here. Let me delete this one. Yeah, so you can see here, this is the weekly DVA high that I was telling you before, that I'm having as a benchmark. And we can see the price action is not doing anything dramatic, it's just in a big accumulation. But you can see here that the weekly DVA high actually held the price, so we see the buyers are still in control. Okay, this is like a framework basically. I'm not trading on them. I like to have a framework, and then I use the imbalances that I drew during my technical analysis to actually, and the liquidity zones, to actually trade on them. Okay, so now let's move on my actual execution chart. I'm gonna show you some examples right from the opening and what was my process of thought during the trading. Okay, so here we have the orange zone, which is the 8-hour imbalance, which is, I'm gonna show you now. So here we can see the 8-hour imbalance. We're at the 8-hour. So just a little bit. So this 8-hour imbalance here, it comes from this imbalance zone, which was about on the 26th of February. I like to keep imbalances of the recent past because it means the market is still sorry, is still getting affected by this imbalance. So we see here it was having a hard time to break them. So I see that the price, when it reaches them, is still gonna get affected by them. Doesn't matter if the balance is 10 days ago or a month ago. Since we're gonna get in the same area, the market is still gonna react to the 8-hour imbalance or the high time frame balance. Could be 4-hour, could be a daily or whatever. So that's why I drew it up. So this is the 8-hour imbalance. Okay, let's go to the execution chart now again. So this is the 8-hour imbalance. If we go to the 15-minute imbalance, let's go to the 15 minutes, which is the blue zone, which is this one. So the 15-minute imbalance is the one I drew right here. Right here, we can see that. Okay, this one was before the opening, so it doesn't matter. This one was covered later, so that was before. Actually, there was about here where I could see the balance, and we see how well the market respected it. We don't see any candle closing below the 50-minute candle, so it means that the 50-minute should hold. So we see here the 50-minute actually broke, and then when it reversed, so the market reversed because it wanted to test this 1 hour imbalance here. Okay, there we go. Because the imbalances since the break, they become reversed. Not always, but if they've been tested again in the backward, usually they become inversed. Yeah, that was the 50-minute imbalance. That was a blue zone, and below it, that was the 1 hour imbalance from that area here. You can see it clearly. Okay, those zones. I dry them during my prep. So let's go back to my execution chart. Okay, so we have these imbalances. These work like guides. These work like like guides where we should see the mark hold or reversed. The liquidity zones, we drew them during the high time frame. They work as targets. The liquidity zones, we have the high time frame liquidity zones, but we have also the intraday liquidity zones, which are like smaller targets, which are most likely to be hit during the session. Okay, so during the session we have the liquidity zones that which are the highs and the lows of the session. Okay, so we go. Let me put that into the like 5 minutes, so it's more obvious. Okay, let's go here. Yes, now we can see. So if we turn on the session, okay, so we see here the session, that's the Asia, London, and the New York. So what I like doing is, so we start from the Asia session, okay? We have this high and this low from the Asia session. I go to the London, and what do I check? That the London broke the Asia session low, so that the Asia session low is no longer valid, okay? But the Asia high is still valid because the London didn't take it, okay? You see a gap, hasn't taken it. That was taken during the New York. Okay, during the New York, we see that the New York high took the Asia high, but it failed to take the London low. The London low was here, it went very close, but it didn't actually break it. But these highs and lows of the sessions, they work also like a magnets, like a targets, So these are some of the liquidity zones I like to draw. And besides that, I like to draw, even if this high, the London high, didn't break the liquidity zone, still there is some liquidity there to be taken. So I mark it. So I mark the lows and the highs and the important zones, Okay, so we turn this off. And now let's go into the opening. So I explain you my train of thought. So let's go back to the 10 seconds, which I was while I was trading. Okay. Let's go all the way back to the opening. Okay, here. Okay. Now we're gonna take it step by step and explain you my train of thought. So we have the opening, okay? We have a liquidity zone right here above the 50-minute balance. So we see here that wasn't the lowest point, but it was a multi-hour low from 8:30, 8:40 until 9:40. So there was 1 hour. That's long enough for this low to be an important low. So I mark it. So we have the opening, okay? So 9:30 doesn't do any it doesn't do any manipulation because we have accumulation, manipulation, which still happen here, and then we have distribution. These are the three market phases. I don't take any trade here because we don't have the manipulation phase, okay? I wait. So we have this target first, which was this high, you see the high. That was during the early opening of the New York. There's liquidity there, obviously. This was taken, and since it was taken back, we withdraw back inwards. So it grabs the liquidity from the outer, from the external liquidity, and what's gonna do? It's gonna take the internal liquidity, which the internal liquidity, we can see them right here. Give me a sec, I'm gonna draw them. Okay, yeah. So we see, give me a second. Okay, nice. So, okay, put the arrow. Okay. So, I was saying that market grabbed the external liquidity. So that was a sign for me that I was waiting to take a short. Okay. We grabbed the external liquidity, so my train of thought, the next thing, I knew that it would target the internal liquidity, which was here, and was here. You see these ones? Okay. The next thing, I was waiting for a break of structure. So what's a break of structure? Break of structure is, I'll show you now. So breaks of structure is this one. So there's a structure. I'm just waiting for the break of structure here, and then what I'm doing is I'm waiting for the market to attempt a pullback at the break of structure at this point. I'm waiting pullback, a failed pullback, you see the structure, you see the pullback, it doesn't go any higher of the structure. I'm waiting the pullback to fail. When it fails, this is my entry. Okay, this is my entry. So as I said, my targets are here, and here. That's the biggest targets. Okay, this week's, this is internal liquidity. Because I have also the VWAP, I'm aware that the DVA high here is very likely to find some buyers. So I'm aware that here we may have a small reversal. So I can take some profits there. Possibly the majority of my position, and let some run just in case it actually reaches these targets. In our case, it did a bigger pullback and it reached eventually the target. Yeah, so that's about it now. So this is my entry here. After we see the liquidity grab, the break of structure, the retest. The retest, sometimes it doesn't happen if the market is very aggressive. But this is just another confirmation. We see that pullback, okay? So that's one short. And then the market repeats itself. I'm going to explain. Okay, we have this. I'm going to delete everything here. Okay. This is one trade, okay? What we see here, the market finally comes here and does a small manipulation
this low, the multi-hour low that we saw before, and it actually touches the 50-minute imbalance. Okay, and what we see here, I'm just waiting now for break of structure. The break of structure happened right here. So we have a break of structure. It's happened right here. Okay, I'm going to extend it though, so you can have a better understanding. Okay, so this is break of structure right here. After the break of structure, what I'm waiting for the pullback to confirm. The pullback happened right here. We see the big wick. This is the confirmation that's going to go higher. It didn't go very high at the moment. It just decided to do a bigger pullback at the lows, and then it went close to the biggest target, which was about these highs. You see, these highs. It just tapped into this high. It didn't do any manipulation here. It just tapped it into it. If someone was really aggressive and couldn't wake the break of structure, he could enter a bit more aggressively without the break of structure, but he could enter right at this wick. This one, we see like a pullback fail. He could enter here, having a bigger risk to reward. So if we enter here, for example, let's say someone enters here, he could go for about 1.2. While if someone enters here, he could possibly, the normality says that we should put the stop loss at the end of the week, but that's below 1 hour. Someone could play more aggressively and say, okay, I have my pullback, I have my confirmation, I'm going to put my stop loss just below this week and play more aggressively. In this case, we could see that someone could reach the 5.6 hour. He could target, firstly, this is so he could target at the highs, but this could have a really nice 5 to 6 hour if you could play a bit more aggressively and trail it, you know. Yeah, I took that trade actually, and I placed my stop here, but I was having my target here. I decided to hold. Initially, I raised my stop about here, but that wasn't. It seemed that it was that market tried to take the stops here before it goes up. So then I decided to hold my stop loss right at the bottom, because I knew that my target is this one. So the market decided to go to do a bit of wicks, to do, you know, take its own time, and then it actually hit the target. This is a small trade. I took by accident. It is a manipulation because you see the wicks tapped into this low. So it is a manipulation, but it was not the end of the range. We have a range here, we have a structure. It's not at the bottom of the structure, so I decided I wouldn't take it. It was by accident, but normally I wouldn't take it because it's not at the bottom of the structure and there isn't any imbalance, any significant imbalance in here. What we see from the market now, after my trade, I left. So after I left, we see the market just drifted into the 15-minute imbalance. That was one of the opportunities that I actually mentioned in my life. And we see the price really dived into it and then reclaimed it. That was also the VWAP here, just to say the intraday VWAP. Only the fact that the price actually lost and reclaimed both the VWAP and the 50-minute imbalance, that would sign an entry furthermore, we see that the market, by doing all this downdrift, it actually took all these lows. So the market took this low. So the market took, just gonna mark all these lows here. So that the market took this low. There's another low here, weak, and there's another one right here. Okay. So we have this internal liquidity targets. So we see the market, what it did, it actually broke all this imbalance and was trying to reach these lows. It took these two lows. We see the first low was really to the tick. It grabbed that liquidity, reclaimed the VWAP and the 50-minute imbalance, and I believe someone who was really aggressive, he could enter here, because we have a pullback right at the 50% of the imbalance, which is this, you see that dashed line, and we're about the VWAP. Someone more conservative, he could wait for the break of structure, which basically happened around here. Okay, so the break of structure happened here. Someone could enter right directly, right away, or someone could actually wait for the pullback, which happened here. You could take the long from here, aiming for this liquidity, this internal liquidity spots 1, 2, 3. And what we see the market did, the market continued higher, and what the market did, it did another, manipulation. We see we had these highs, so the market did another manipulation here. And then what? We have the distribution phase, which happened here. This one. So that was a really nice trade. Possibly if I was on the charts, I would have taken it probably about here, having my stop loss at the bottom. So probably my trade would be, let's say here, having here, and having as the bigger targets about possibly, I would peel some off. So my initial targets would be here. My extended targets would be this one. It's 2.5 R, it's a very good R. 2.2, 2.5 R. Decent trades. So we see after the manipulation, the price goes into the VWAP again. We retrace the 50% of the imbalance, which is right here. You see, you couldn't hold above. And it heads down. I don't see anything big here. Obviously, there is a big imbalance on the here. If we go to the, let's go to the 1 minute. See, there's gonna be something here. Yeah, on the 1 minute, we see 1 minute imbalance here. Okay, let's see. That'll go. Okay. So there's 1 minute imbalance here that we see the market respects. Okay, So we see the market, it comes down to the 1 minute imbalance from this point, it respects it, and tries again to go higher. There is some manipulation. It took some liquidity from these lows, internal liquidity. For example, about here, you see this internal liquidity zone, just grabbed it. Anyway, we see that the market respects these liquidity zones. It manipulated, it grabbed it, and continue higher. There isn't any entrance here because we're still in the middle of the structure. Another nice trade happened at 11:25, which is this one, because the market, what it did again, it went from internal liquidity to the external. So it got all these stops from the shorts here. It did another higher high. Just pop it here. Boom. And then what it did, just it traced again to take all this internal liquidity from this, from here, and from this one. And from this one, of course, there's so many. You see? So these are liquidity generated on its way up, but it was waiting for to be taken. But what we wait for the market to do is first do the manipulation and then do the distribution. We see the manipulation, came right back into it. We could take a trade in theory. We have manipulation, then we wait for the break of structure to happen. So the break of structure here is this one, to be honest. I'm just gonna delete, no, I'm not gonna delete anything because you're gonna get confused. So I'm just gonna mark it. So the break of structure, basically, the base of the structure of this one is right here. So we see this one. So this is the break of structure. The moment we see manipulation, we're just waiting for the break of structure, which happened here, and then we're waiting for a failed pullback. We see here, it happened once and twice. Once we see that, this is our entry. From there, someone conservative would take some profits here, but since also here is the DVA high, okay, so someone could take some profits right here, because in our occasion we may had this chance. So the market could do easily just that at the DVA high if we had some buyers. So I would recommend take some profits here and let some runners run just in case we go to the VWAP. Anyway, this is our entry. We see goes, takes all the liquidity here, takes all the liquidity here. And what it does, it finds big rejection at the 50-minute imbalance at the 50% right there. Initial reaction, but it continues lower into the DVA low. And it stops right here, which is the 8-hour imbalance, the 50%. For some reason, market likes to test the 50% of the imbalances. So yeah, that was a big trade. Someone could have taken here and ride it all the way, either peel some off here, some profits, and let a runner, or he could hold it all the way to the VWAP, then take some profits here, and leave some runners to this imbalance at the DVA low here. Then there's nothing really happened. It just market went straight into the imbalance. Couldn't break it. It was just chopping around. And then we saw slowly grinding up again. So today, on Friday actually, sorry, we had really big opportunities. We had someone could take the ranges in here, 1, 2 ranges, 3 opportunities, 4 opportunities, 5. So we had really 5 trades in there. 3 of them were really nice, A+ setups. So this is what I'm looking on the charts. Specific things, A+ setups. I don't take anything in between. This is a combination of ICT concepts and some niche entries. I'm looking some marks. I'm looking for the entry. Some high time frame analysis. If you combine them together, like we do here, it's really powerful. Anyway, if you have any questions, feel free to reach me. Happy to answer any questions if I know it. And yeah, have a good night. I'm not gonna trade tomorrow, but I'll be here on Tuesday for the Tuesday session. See you later.